Good morning. It's time for Trading Hour. In this penultimate trading session of the week, we are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Harmis Patakia. With me, as always, Rima Tendulkar. Rima, good morning. The bulls are fighting tooth and nail to protect that 25,000 mark on the Nifty, so much so that the low of the session is 24,999 and a half. So it goes to show the significance of that 25,000 level. Of course, the broader markets are doing fairly okay for themselves, but it's been a rather quiet day, a range-bound day so far. Of course, today being the BSE monthly expiry as well, that needs to be considered into focus. So as of now, the index continues to hover around that 25,000 mark, and the recovery that we saw at the initial part of the session was quickly sold into, Rima.
Indeed, Alan. The question is whether 25,000 mark can hold by the close of trade. On the way down, it continues to be Tata Motors, so that is reeling under pressure, and I think extending the fall now on the way down. But outside of that, a couple of these consumption-related names are on the back foot. So you've got softness in Asian Paints, a Titan, even an Eternal Trent. These are stocks which are trading with some losses. IT continues to remain weak. So TCS, HCL Tech at the index level, it's down close to about 0.2%. But individual stocks like TCS have a cut of more than 1%. And auto names, M&M and Maruti, are seeing some profit booking. On the way up, well, it's PSUs, BEL, ONGC on the buying list at Coal India, and then throw in a couple of metal names, Hindalco as well as Tata Steel. But on the whole, things are on the quieter side, at least this Thursday morning. But let's talk about individual stocks. That's where all the action is. And you're seeing that Dhamaka. Harmis is now at the big wall with the top movers at this hour.
Some interesting names that have sprung up in today's trading session. Some of them are news driven. We'll start off with Hindustan Copper in today's trade. Now 6% higher on the stock. This is the fifth straight day of gains for the company, and it's up 17% in this 5-day gaining streak that the stock has had. Now, in the last 4 weeks, there have only been 4 instances that the stock has ended lower on a closing basis. And today's volumes are on the higher side. Now, we have already had more than 2 crore shares that have been traded, almost a 6x compared to their 20-day average of around 30 lakh shares. And courtesy of this move, the stock is already up 43% in the month of September, making it the best month that the stock has had since December of 2023. The other one on the list is Finiotex Chemicals. And the stock is cooled off slightly, still 12% higher. At one point was up 16%, the biggest single day gain since May of 23. And volumes today are also on the higher side. Now 91 lakh shares have already been traded on Finiotex Chemicals in the first couple of hours of the trading session. The 20-day average here is only 73,000 shares. Of course, the announcement that was made by the company yesterday that the board is going to meet on the 27th to consider a bonus and a stock split. This will be the first instance where the company will be giving bonus and stock split after 2015, and finding some resistance near that 200-day moving average. It went close to that level of 267, but has cooled off slightly as a Finiotex Chemicals. We've been talking about auto ancillaries all through this week, and the name that springs up today is RACL Gear Tech, a small company, and it's gained in 3 out of the last 4 trading sessions this week. And look at the volumes here. We've had more than 2 lakh shares that have been traded. The 20-day average at this time of the day is only 3,000 shares, and we had a similar instance last month as well, where more than 6 lakh shares had changed hands in a single day on the 21st of August as well. And as has been the trend over the last month or so, the stock has taken support yet again at its 50-day moving average of 926 and has then rebounded from those levels. And lastly, Texmaco Infra, not Texmaco Rail. The stock here is also up 6%. At one point was up 8.5. So this too has cooled off slightly from the highs. Now, today's volumes are already at the highest level since March of this year, and we've already had 11 lakh shares change hands compared to a 20-day average of only 30,000 shares. It's broken above its 50 and 100 DMA of 97. It's at the 100 DMA right now, which is at 99, and the 200 DMA on the upside comes to levels of 106. So that's another important level to watch for Texmaco Infra. The stock is down 20% so far this year, was up 20% last year, so the returns over the last 2 years is just 0.
Thank you very much for that, but let's get to the stock of the day. Tata Motors in focus and continues to trade with losses. This is after JLR Land Rover is likely to be hit with a $2 billion pound bill. as it was not insured against the cyber attack. Sudarshan is here with the details and the numbers.
So it's a fresh trouble for Tata Motors and say indirectly JLR also. And the reason is that JLR did not have insurance coverage before cyber attack, and because of this, Financial Times has today reported that it might see an impact of £2 billion. And apart from this, because of the delay in the production and company had extended the production pause, already company has been facing £5 million impact on a daily basis. Now, if you take a look at the timeline, so on 31st of August, cyber attack had happened. First statement from the company was released on September 2, in which company had talked about that it's looking into the issue and will be restarting the production very soon. The latest statement was released on September 23, in which company has said that it will be looking to restart the production in a phased manner. But now after that, there is no update. So if you take a look at the impact, overall impact, so in FY25, total profit after tax of JLR was £1.8 billion. Now, if you calculate of not having the insurance coverage and impact because of this, £2 billion and £5 million per day impact because of production delay, impact would be much more than company's total profit that it has reported in FY25. Now, apart from this, Guardian has today reported that UK government is looking into several options to resolve this issue, and one of those options is that government is looking to take the part supplies directly from suppliers, and once JLR resumes the production, government will supply back to JLR, and in that way it can help the company. Now, why is it important for Tata Motors? Because JLR forms nearly 70% of its total consolidated revenue, and because of this major impact, in the last two sessions you have seen a big fall in the stock, down somewhere in the range of 6 to 7%, and today also it's down 3%.
Top loser on the Nifty, a slight recovery, if you could call it that, because at one point was down 4%, now down 3% is Tata Motors, was down 3% in yesterday's trading session as well. So underperforming is Tata Motors among the top losers on the index. So the other stock that is on the radar today is RBL Bank, and there are multiple triggers that you need to watch out for on this stock going ahead, be it the stock being in the F&O ban and a lot of other triggers as well. Gaurav is here to tell us exactly that. Gaurav.
Well, yes. For RBL Bank, I'll give you two reasons why you should focus on the bank. First is that Citi's note. Now, Citi met with the management of RBL Bank, where they have given some optimistic guidance. First is that when it comes to net interest margins, management has said that net interest margins has bottomed out, and from second quarter we will see some kind of improvement. In terms of advances, they believe that it will be driven by secured as well as commercial banking. While on the other hand, when it comes to MFI, they say that the disbursements are now outpacing repayments, and that is the reason why the rundown risk is eliminated. When it comes to some of the asset quality constraints, the JLG subsidies as well as credit cards is taking longer than what it was expected. But on the other hand, the core fee income, that is likely to increase and improve from here on. Management also said that the cost control measures are underway, and from third quarter we will see some kind of benefits. And as a result, for Citi, although they have now closed their 90-day catalyst watch, they have remained positive on the stock. They have given a target price of 300 rupees with buy rating. Other than that, second reason is that the AGM is going to happen tomorrow. Remember, board has already approved fundraising in the tune of around 6,500 crores, out of which 3,500 crores are going to be from QIP. Although board said that this resolution and this approval is enabling approval, tomorrow they will seek for shareholders voting and approval, and that is the reason when it comes to stock price, both these reasons are supporting the stock price right now. As we speak, it is up more than 1% today.
Thank you very much for that. Another stock you should watch because of a potential trigger is Glenmark Pharma. Today, of course, it's in focus on account of that in-license deal for an oncology drug. But tomorrow, the board will be meeting to consider an interim dividend. And remember, the company got about $700 million upfront on account of their deal with AbbVie. Now, Nomura says that even assuming a 20% tax, the return debt of about $150 million, pay that back, $200 million for R&D, and some in-licensing cost, $150 to $200 million is what the street is anticipating will be returned back to the shareholders via the interim dividend. So that will be a stock to watch, Glenmark Pharma. The key catalyst is the interim dividend announcement tomorrow as the board meets. Get into a break. On the other side, crypto markets with Manisha Gupta and Santiago Santo will be joining in.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
As promised, let's shift our focus now to the space of crypto. And Santiago Roal Santo, who is Chief Executive Officer at Inversion, now joins us to discuss more. Santiago, hi. What's your sense, really, when you look at the kind of rally that we have seen in the crypto space so far? Your take on this year, and how are you looking at 2026 likely to be?
Hi, Manisha. Thanks for having me on. 2025 has been a hallmark year for crypto. We have a very different regulatory environment, and you've seen more and more institutions adopted. Certainly, crypto asset prices have reflected that, but we're at a pivotal inflection point in the industry where finally it's more legitimate, it is more recognized, and businesses, not only in Wall Street, but in Main Street, are realizing the opportunity to really harness the technology, which is blockchain, which has been in development for the better part of a decade.
As you mentioned, well, yes, crypto technology is growing and massively so. How do you read into that, and how will it evolve into real-world asset classes?
It's a great question. You know, the reality is crypto is still not relatable for people in the same way that the internet wasn't in the early 2000s. Crypto finds itself in that similar situation where you are seeing tokenization endeavors by the likes of BlackRock. You're seeing stablecoin adoption. Companies like Visa and Revolut and other large financial institutions are adopting stablecoins. But that's really just the tip of the iceberg. What we see at Inversion is a great opportunity to adopt blockchain technology and infrastructure into traditional businesses to make them vastly more efficient. And you're already seeing that play out in certain businesses where companies are using, like Visa, are using stablecoin rails to settle 24/7 and instantly in a faster, better, cheaper way.
Santiago, you have transferred and acquired traditional businesses using blockchain, etc. How many companies is that, and how do you look at the overall ecosystem from here on?
I mean, as I said, the opportunity is vast. You know, it's not just tokenization and stablecoins. Every business will be using blockchain technology over the next 10, 20 years, in the same way that they started using the internet over the last 20 years. And that's, I think, the real opportunity that we see at Inversion, which is adopting blockchain technology and applying it to businesses like a remittance operator. You just saw yesterday, one of the largest remittance operators, MoneyGram, start using stablecoins to move money cross-border faster, better, cheaper. And so really, when you think about the opportunity at hand, we have businesses that continue to use antiquated infrastructure. The financial system predates the internet. And that's all really you need to know to appreciate the opportunity, which is blockchain and decentralized finance. All of this technology that's been developed for the better part of the last 10 years is mature enough to be applied at scale. And so when we think about the businesses that we want to go to acquire, we have very specific sectors that we like telecom, finance businesses, especially if it's cross-border trade. Those are the type of businesses where we see a material cost improvement and the opportunity to change the unit economics of that business in its own right.
I get your point there, but in US right now, what we're looking at in sense of legislations is for stable coins, and market seems to be believing that this can come for tokenization and even real world cases. Your take on this?
That's certainly the way it's been playing out. You know, there are a variety of flavors of stablecoins, from Tether to USDC, which is launched by Circle. You're seeing Stripe launch its own payments-based blockchain. So it certainly seems to be fragmented in that sense. And you have sovereign, central banks explore with stablecoins. So I think we'll continue to see a proliferation of companies that have distribution, that have the ability to utilize this technology, which is open source and available to anyone. And so, for instance, Visa is using its own settlement rails to process now over $1 billion of stablecoin settlement volume, which is 4x what was done last year. So I think you're going to continue to see that trend. It is still quite early, in my opinion, but more and more companies are at the board level seeing what Visa is doing, seeing what BlackRock is doing, and Stripe, and some of the leading companies, public companies that you cover in your segment, and they're saying, gosh, why don't we have a crypto strategy? Why is it that we're not using stable coins or tokenizing certain parts of our business. And that's really, I think, talks to what you're talking about, which is an increased adoption of this technology. And certainly you see different flavors. As you know, there's many different blockchains and type of stablecoins. So I think that trend is going to continue to persist.
Santiago, I get your point when you say that most traditional asset classes and companies perhaps would be looking at blockchain as a technology in next 10 to 20 years. How would you look at tokenization, though? Is it going to be limited to some, or do you see a widespread of that too? And what macros from here are you looking at?
Certainly, look, you just saw a rate cut, which is monumental in the U.S. I think that's obviously incredibly important. Crypto is a risk-on asset class, so of course rates and Fed policy factors into that. I think as it relates to tokenization, you're going to continue to see crypto companies go public. You just saw, of course, earlier this year, Figure Technologies went public. You had Circle go public, and that's been well received by the market. I think there's a lot of excitement from market participants to continue to get exposure to this asset class. Figure is a great example of a company that took a particular product in the financial services industry, which is HELOCs, and has made it more efficient by utilizing blockchain. And so that is a really interesting case study of how companies can apply crypto to make their back-end infrastructure more efficient, which is a little bit unique in the sense that most people have thought about crypto as a speculative asset class, which is it's Bitcoin, it's some of these crypto asset prices and tokens. And, the industry is large, it's come a long way, but it's still not, again, very relatable. A lot of the conversation with crypto is just about crypto asset prices. I think you're going to continue to see over the next 5-10 years, more and more conversation about the actual technology and how large companies, public companies of all sizes, utilizing this technology. And that's one of the things that's most exciting. Of course, macro plays into the equation. But the analogy is, companies are not making a decision of whether to use AWS or Azure because the price of Amazon or Microsoft went down 20, 30, 40%. They're using those infrastructure services because they render a really good service. And I think that's the next chapter of crypto, which is, yes, prices are important, but the actual technology will take more of a driver's seat in the conversation with businesses. And that's something that you've just never seen in crypto before.
Oh, absolutely. These are those times that we have seen the cryptos do quite well. And the kind of conversations that we are looking at globally also have been quite supportive. Santiago, thank you so much for that conversation. And with that, we slip into a short break. More news and developments on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. There's some recovery from the lows of the day, but the overall trading range throughout this session has just been 90 points between the day's low and the day's high. So what is exactly the FNO data indicating between this tug of war between the bulls and the bears? Sudarshan is at the FNO desk to tell us just that. Sudarshan.
You have correctly said that it's a tug of war between bulls and bears, and that's what. So in this tug of war, what we are going to see that market is expected to remain in a range from 25,000 to 25,100, and there is a reason to it. So the velocity of call writing that we were seeing yesterday, that velocity has reduced, and even on the put side, the premium increase that we were seeing yesterday, that we saw even at the close of yesterday, that also now for the put options, both 25,000 and 24,900, that it has almost become flat, and that it's being reflected even in the put call ratio. At the close yesterday, it was at 0.91. Now it has fallen to the level of 0.82. So two call options that I have taken, 25,100. You will see the fall in the premium, but at the rate we were seeing yesterday, now it has come down. So for 25,100 call, premium is 82 versus 110, and for 25,000, premium is 135 versus 171. But on the put side, if you take a look, 25,000, premium has seen a minor increase to 68 from the level of 62. So if I put my neck out and if I have to say, for now, the data suggests that Nifty is likely to hold 25,000. So immediate support will be 25,000. If we fall below that, next support comes around 24,900. Resistance remains around 25,330. As far as Nifty Bank is concerned, support is around 54,600, that is 20-day moving average. And resistance remains around 50-day moving average, that is 55,434. I've taken 3 stocks. First one, on the back of sharp increase in copper prices, you are seeing a big move in all the names like Hindustan Copper and all the metal stocks. So one stock from that pack is Vedanta, which is up almost like 2 to 3%. HL, Hindustan Aeronautics, you have seen that the government is going to sign the Tejas order very soon, today, this afternoon. And on the back of that, this stock is also seeing fresh longs. And on the short side, fresh shorts being seen in the name of Astral.
Thank you very much for that, Sudarshan. So for now, data seems to suggest 25,000 could hold. In fact, let's ask Sneha Sheth from Angel One. She joins in for a quick technical check. Sneha, today is also the monthly expiry for BSE. What's your sense? How are we likely to close? And do you think this 25,000 mark will hold? Is this a good time to go long, considering markets have been sluggish or weak for the last couple of days?
Very good morning. Yes, I mostly, if you look at the data yesterday, even though we saw some selling pressure from the higher levels, we did not see any major unwinding in the put side. So if you talk about 25,000, which is in support zone, there also we haven't seen any unwinding. So overall, looking at the data, I believe market may rebound from here on. So we have been suggesting going ahead and buying 25,100 call option if someone is interested. And for now, I believe the support is around 24,900, 25,000 would be acting as a support. Any move above 25,300, 350 would be interesting. Banking index, again, it has been trading near the support zone. And from here, the risk reward ratio looks very good. The index is taking support near the 89 EMA, and we expect an up move from here on in this index as well. So I believe one should be taking a long position at this point in time and avoid any, being very aggressive. Look for the levels on the higher side for Nifty around 25,200, 300 would be the levels to watch out.
And stocks?
In individual counters, like metal stocks has been showing some buying interest, and I believe Hindalco has been showing decent strength recently, continuously trading about 20 DEMA and has been consolidating around those levels only. Now, looking at the overall chart structure, I believe this counter looks poised for a move above the record high even. So I would suggest going and buying this counter with a strict stop loss of around 735, and the target expected will be around 780. Apart from this, the another counter which I'm liking is L&T. Now this counter, if you see, from quite some time, it has been taking resistance around 3,700, 720. Those zone has been acting as a resistance. But looking at the overall chart structure and the kind of move we have seen recently, I believe we may see an up move above this resistance zone even. So I would suggest going ahead and buying this counter with a strict stop loss of around 3,600. Upside target would be around 3,820.
Sneha, thank you for sparing time and joining us today with your views on the index and on specific stocks as well. Take a short break. On the other side, we continue the conversation on the markets, and George Thomas from Quantum AMC joins in on the other side.
Welcome back. George Thomas, Fund Manager, Equity at Quantum AMC, is now joining in to talk about market fundamentals. George, great to see you this Thursday morning. Let's talk about insurance, because the last time you said, I think you like insurance sector as a whole over the medium term, and there is a case to be made, rising penetration, etc. But just yesterday, we were discussing with a colleague that how the IRDAI wants the commissions paid to distributors to come down, and it's still source-based information, but they've asked the companies, insurance companies, to explore a model which is similar to that of mutual funds, where the total expense ratio is capped. What are your thoughts? If this were to come to pass, does it change the investment thesis in insurance companies?
See, if you look at the broader insurance sector, the penetration levels still continue to be very benign, and there has to be. It's too early for a pull model to work, where customers would come and demand, and then you would have to sell some of these products. So there has to be a certain kind of incentive in terms of promoting the penetration, and of course the awareness would increase over a period of time. So our sense is, even if there were to be some cap to become into the sector, it's very unlikely that the commission rates might vary very in a very aggressive manner. And the point to note here is, some of the players where we are positioned, they are slightly more established. And if this incentive is this scheme were to come down, it's very unlikely that they would see a material deterioration in terms of their competitive positioning.
George, good morning. Thank you for joining in. We have had enough and more conversations about how the GST rationalization has been a good one for the auto sector. But the sector that has been in the spotlight over the last week or so has been the auto ancillary names. Now, auto companies have come out with reports, at least some of them, saying that the first day of Navratri was really good. We'll be watching out for their sales numbers next week. But does that also mean that it is also a benefit for the auto ancillary space, considering if demand picks up in the auto space, it's good for them as well?
Yeah, obviously, as the auto volumes increase, that will percolate down to some of the auto ancillary companies as well. But looking at the stock movement in terms of how the prices have reacted since August 15, when there was an indication that there could be GST rationalization, our sense is, a lot of the stocks have rallied by almost 15 and some of 15 to 20, and some even up to 25%. So our sense is, looking at the GST impact, the most likely event which can happen is some of the people who are sitting on the fence, they would come down and decide on their buying decisions, and there could be a near-term pent-up demand. But the longer term, how the volumes progress is more dependent on how the fundamentals move, like how the incomes shape up and stuff like that. Of course, there is a possibility that the bottom of the pyramid, where affordability was hit to a larger extent, we would see some volume benefit coming up there, and that number could be slightly better in the near term. But the longer term volume growth assumptions would still continue to be contingent on the fundamentals of how the income growth and affordability pans out.
What about IT? I remember you seeing value in IT stocks after the underperformance, still down more than 15% on a year-to-date basis. But now there has been this additional setback on account of H-1B visa. And while it may not impact EPS in a great way, it could even be neutral. As of now, it does create a lot of uncertainty. So at such a time, does it still make sense to invest in technology names?
So we continue to have a large allocation in the large IT service companies. So if you look at the notification which came out, it kind of mentioned very distinctly that some of the unemployment numbers in the fresh graduates in US have gone up. And if you look at the H-1B filings for Indian IT service companies, the share of filings in those level 1, which is the lower tier of job profile, that's very minimal. But of course, that number is slightly higher if you go to the big tech and some of the US-based MNCs. But from an Indian IT service perspective, our sense is, the fundamentals still continue to be higher, especially if you look at the large IT service companies who can stitch larger deals, do end-to-end work. Their thesis continues to be strong. But of course, investors need to be cautious in some of the names where margins are a lot lower. And in case, there has to be some wage pressures which would happen in the interim, there could be EPS impact in the near term. But of course, on a longer term basis, as long as the cost arbitrage between on-site and then offshore resource continues to be favorable, they would be able to pass on some of these incremental cost to the end customer. So the major revival in the IT service would be in terms of where we would see a revival in growth. And that typically happens when there is a pickup in terms of implementation of new technology. For instance, right now, Gen AI is gaining traction, but we are seeing less number of use cases to be enrolled or to be rolled out at an enterprise level. So as that implementation gains space, some of the Indian IT service companies would start reporting reasonably good growth numbers.
What about metals, George? They too have been in the spotlight recently, with almost all metal prices heading higher, gold being at record highs, copper being at the highest level in a year. Do you believe that the cusp of is the metals market on the cusp of a super bull market, as a lot of the analysts globally have been mentioning about?
See, as far as metals are concerned, there are 2, 3 variables which we need to be cognizant. One, of course, the rate cutting cycle. The rate cut cycle is positive for them, and generally that is assuming that the global growth generally picks up when the rate cut starts, and therefore that gives some bit of tailwind for metal prices. But the bigger question here is how the China exports or Chinese volume would pan out. Until now, we have not seen a material deceleration in exports from China. And if at all, and we have heard announcements that China would curtail production in certain metals, contingent on reducing the pollution levels and stuff like that. So if that were to happen, and if the markets become tight, the demand supply scenario becomes more balanced, then we can expect a reasonably strong rally in metals. But the prime thing to note is how the global growth pans out. So even now, we are not seeing a material acceleration in some of those segments in China, which holds more than 50% of demand in many of these metals, like construction or real estate. We are not seeing a big acceleration in those pockets. As for a material rally in metals, I would assume that would be essential, along with some bit of production control in China.
Thank you very much for that, George. Get into a break. On the other side, we'll put the spotlight on the shipping sector in our special segment, The Big Story. Stay tuned.
Welcome back. On to today's big story, which is on the shipping sector. And after the slew of reforms that were announced by the government after the cabinet meeting yesterday, the cabinet having approved the shipping and maritime projects worth over 70,000 crore rupees. Now, this includes financial assistance and a development scheme for shipbuilding worth nearly 45,000 crore. The government also cleared a maritime development fund worth nearly 25,000 crore rupees. Now, speaking to CNBC-TV18, Shipping Secretary spoke to us, and we spoke to him to understand how will these reforms impact India's shipping sector amidst all the global headwinds that the sector currently faces. Here's what he had to say.
The Shipbuilding Financial Assistance Scheme builds upon an earlier scheme, which was the first version of the scheme. And the idea is to provide assistance to shipyards to bridge the gap between the cost of acquiring a ship abroad versus acquiring it in India. So this difference was about 15 to 20%. So this scheme incentivizes the cost of acquiring a ship, and it gives you a subsidy of 15 to 25% depending on how big the ship is.
Speaking about the shipbuilding development scheme, which is of 19,989 crores, how will this actually encourage ship manufacturing in the country and making it a larger exercise beyond the PSUs as well?
Yeah, so at the moment, some of the largest ship builders in India are either in the defense sector or in the sole one is the CSL in the shipping ministry, under the shipping ministry. The net result of having only a few shipyards in the public sector and a couple of them, in the private sector, like in Pipavav or L&T or Shaugule, etc. But the thing is, we don't have capacity. We produce only about 50 to 60,000 GT per year. And therefore, one reason we found was lack of capacity. So this scheme was brought in, one, to improve the capacity of the brownfield shipyards, so that they can, so they get about 25% subsidy. The cost of capital cost of setting up new infrastructure in a brownfield brownfield shipyard, up to 25% we will give them. Then in the new clusters, which are to be set up, about 2 or 3, they call shipbuilding mega clusters, we have programmed to give about 3,000 plus crores per cluster, and this cluster will be jointly implemented with the state government.
You also have a maritime development fund, which is pillar number 2. And the important component in this is the maritime investment fund of 20,000 crore that will be set up. Could you give us a sense of how this will incentivize ship makers in the country, allied sectors? There is also talk of private equity investors coming in, blended finance structures. How will this work? What do you really envision with this?
One of the reasons, like I said earlier, for the shipping industry not being a non-starter in India was that there was lack of finance. And so we've tried to do 2 things. One, like I said, the debt portion. The other is the equity portion. So we have brought in this MDF, the Maritime Development Fund, with a corpus of about 20,000 crores. Half of it will be, 49% will be contributed to by the government. The rest will come from the ports, from private funds and other international sovereign funds, pension funds, and so on. So that there is a corpus of about 20,000 crores spread over a period of about 10 years. And it can be much larger than that. And this can be then leveraged. So we expect that, about 7 times this will be the kind of investments that can be generated.
Okay, that's a very large sum, 70,000 crore boost. Ria is now joining in. Ria, first explain the impact, what are the implications for the sector?
Well, yes, this is a big push for the overall shipbuilding industry in India, which currently holds a very negligible share of the global shipbuilding market, estimated to be less than 1%. The scheme aims to support an overall investment of rupees 4.5 lakh crores into the sector as a whole. It also aims to support around 4.5 million gross tonnage of shipbuilding capacity, with the potential to reach around 8.2 million gross tonnage in shipbuilding output. These schemes have actually been designed to strengthen domestic capacity, improve long-term financing, promote greenfield and brownfield shipyard development, and also enhance technical capabilities as well as skilling. Now, specifically the Maritime Development Fund, this provides long-term financing for the sector, reduces the effective cost of debt, and also improves overall project bankability. In terms of the Shipbuilding Development Scheme, this supports mega shipbuilding clusters in the country, infrastructure expansion, and it also aims to establish the India Ship Technology Center under the Indian Maritime University. Now, overall, we can expect an additional port capacity of around 250 million MMTPA with additional vessels over 2,500 as a result of these measures. These shipbuilding and maritime development reforms are to be spread across the next 10 years, and shipbuilding is also expected to have an overall employment multiplier effect of around 6.4 and an investment multiplier effect of 1.8, and the government is also expecting an additional 30 lakh jobs as a result of the Maritime Development Fund. In terms of the stock impact today, Cochin Shipyard and Garden Reach are trading higher by around 2.5 to 3%. Mazagon Dock is also seeing some gains of around 1% over the last 1 year as well. All of these stocks have performed quite well.
Okay, all nice sounding announcements, but it's spread over 10 years. And stocks are higher in trade, but you aren't seeing a lot of exuberance in them, just up 1, 2 to 3% odd.
Right.
Okay, thank you very much for that. We'll come back and get you more on the market. Stay tuned. Welcome back. Now 25,000 level has been taken out. The Nifty is extending the fall down close to about 68 points. And Hormus was just telling us that we had a 1,000-point rally from 24,400 to 25,400. And from that level, about half of it, 500 points, has been given away.
500 points knocked off, and it's a 1,000-point rally in just 14 days. So we're seeing some bit of retracement from those highs. You take your leave on this edition of Trading Hour from Rima and me. Thank you for watching. Halftime report on the other side.